Hey traders, this is Ron Hayde at Market Tamer. Happy Sunday. Hope you're having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with a daily chart of the Qs using Thinkorswim's profit charts. If I go ahead and zoom in, you can see we had a down day on Friday. We did hold the blue line, which is the 5-day exponential moving average. And we talked about when the market gets above it, the short term, the 5-day period is bullish. Well, we got up and hit the red line. That's the next short-term moving average, which is a 20-day EMA. We hit it Thursday, tried to get above it Friday, and we just couldn't by the end of the day. And now we're just sitting right on top of the 5-day. So the outlook is this for the 5 days going forward. Bullish on the Qs, barely. But on the 20-day outlook, we're still bearish. So I would say caution is warranted this week. We're coming into the election, which is Tuesday. That'll give us some clarity. We might see a pop, we might see a drop. We just have to see how that shakes out. We'll still cover it in the nightly videos. Let's take a look at the Dow via the diamonds. If I zoom in here, the Dow on Thursday got above the red line. It was the strongest of the majors, above the 20-day EMA. But on Friday, we gapped up, looking good. Target would have been the 50-day in orange. That's the institutional moving average. But what happened? We ended up closing lower on the day, but we're still above the 5-day. So 5-day outlook on the Dow, bullish, but we're not above the 20-day just yet. Take a look at the SPY, which I have a bullish position in. The S&P 500 ETF. If we go ahead and we zoom in, try to get above the 20-day and the 200-day. Now the 200 days in purple, that's another major institutional moving average. Could not end up closing down. Broken record here, right? We're above the 5-day in blue. Short-term period is up, but we're also below the two of the key moving averages on the upside. Again, it's all about the election. We got to get through that. If we go to the IWM, the last of the four majors here, it closed pennies, literally 4 cents, 4.5 cents below the 20-day EMA in red. So it just didn't quite get there. Target, if we get above the red line, you go right to the purple. Now, if this takes a while, purple's the 200, the orange is the 50. These are going to soon come together over here, but we'll just have to see how this week plays out. Again, across the four majors, short-term bullish going out 5 days, but with the election, anything is possible. If I start transitioning this and we go 2-year weeklies, what do we see on the weekly charts? Now, instead of these being daily moving averages, they're period moving averages. I go ahead and zoom in. You start with the Russell. We're below 3 of the majors. The 5 period, the 20 period, and the institutional 50 period. It's bearish on the weeklies right now. Yes, we put in potential 2 bottoming type tails here on these candles, but you know what? That does not mean anything. We are below the 5 period. It does not matter. This is still bearish on the weeklies. If we take a look at the Qs, and we zoom in, they're basically right on their 50 period. They are clinging, the bulls are clinging to hope. They really don't want to close below here. You can see we got as low as 160, which is this old consolidation or support zone, 155, 160, and we bounced, but we're also below the 5 and the 20. So this is still, I would give the bears an edge here. Again, clinging to support. The DIA on the weeklies, looking a little better. We did get well below the 50 period, but got back above it. And we're just barely below the 5 and the 20. So the Qs the diamonds are clinging, but above the 50-day, not to the 50-day. And here's the SPY. It ended up closing below the 50 period. This would be bearish. And this is 500 companies, below 3 of the majors, albeit pennies, not good. So daily charts, 5 days out, bullish. Weeklies, big yellow flags. I think this election week could be the make or break. Either we can sell off, which will not end the week well, and it would clearly break these support levels. And the question is, do we even violate last week's low? And does that push us into the weekly support zone of 255, 260? Keep in mind, 260 was the low this past week. So if we actually went back down to 250, you know, that's 21 SPY points or 210 S&P points. So like I've been saying for the last couple of weeks as this decline is underway, it's really all about the election. Now I want to take a look at gold and silver. We don't even need weeklies, so I'm going to go into a 1-year daily on GLD. I received a question about, you know, maybe the market's at top, this is the mother of all tops, etc. Just remember that they've been saying this, those people, for years now. In 2012, 13, 14, 15, 16, 17, eventually they're going to be right. One day they're going to be right, then they're going to tout that one time they were right as if there's some kind of profit or something like that. I don't see gold and I don't see bonds, which we're going to look at next. Nothing is rallying in a big way, showing that capital is fleeing the stock market. You know, it's not going to go to Europe. The euro's imploding. It's not going to go to Australia. It's not going to go to China. It's not going to go to Russia. Where's the capital going to go? There's only one place in town, and that's the US market. And until that turns, the outlook would remain bullish. For me personally, on the charts, we're seeing a slight breakdown in the weeklies, but on the monthlies, and I'm not going to waste your time today with it, the monthlies are very strong. There's nothing wrong with the monthly charts here on the major ETFs in the stock market. But getting specifically into gold, gold didn't really pop that much. I mean, you saw the S&P. Let's go look at the spiders. Pretty dramatic correction, right? Well, they must have run to gold. They had to, right? Yeah, no. They didn't do that. They popped up a little bit and they're consolidating. Now, from a little bit of an interesting perspective, here's the consolidation. August and September. We start trying to have a move up. It can't even close at the highs of the day for the most part. Look at all those dark candles and red candles. It's all closing down. We're back testing the previous highs. That is one little bit of a bullish event that happened on Wednesday. We got back above it, but gold's not running away. And from a seasonality perspective, between now and the end of December, it's not a good time for gold. There is no major bullish bias. It doesn't come in until the last week of December, first week of January when they go bullish. Well, if gold didn't pop, maybe silver's popping. Yeah, again, silver can't get out of its own way. Look at all these dark candles. So think about it this way. If you're really bullish on these things, you would want to push them to the highs of the day. But it's just the opposite. Lows of the day. That's why it's a black candle. It opened higher but closed lower. Red candle, closed the lows of the day, closed the lows of the day. Look at all these closes. No one's willing to say, I want to take this into the end of the day and be really bullish. They just can't do it. There's a lack of confidence there. That's what it tells me. If gold and silver were to get a pop for whatever reason, all we would do is, we can see the resistance right here at 14 on silver. I would go right up to the 200-day because there's no major pause. So the 200-day would be the target on the upside. And then if I just transition back to gold, it would also be the 200-day. Those aren't exactly big upside targets to shoot for. I think there's better opportunities for some trade ideas out there. And then the gold miners, if you're curious, we did have a nice pop, back on October 11th, and then they came right back down. Yeah, they did some back testing here, the 50-day SMA in orange, and they're pushing up, but it's just nothing super strong. We can draw a little bit of a channel on gold. It's not perfect, and it doesn't need to be. I could even try to take this over here, and that makes it a little more symmetrical. But there's only one day of big volume. There's also days of bigger sell volume. I don't see anything here that says, wow, this really looks bullish. It's just a bounce. In fact, I could even label this a bear flag on the daily charts. Okay, so if they're selling off the stock market and they're not running into gold and silver, they gotta be going into bonds. Not at all. Bonds broke support in October. While the market was selling off, they barely bounced, and now they rolled over hard on Friday. If I go back and do a 5-year chart of bonds, there's support basically almost right where it is. I'm going to say the 112 down into 110, then there's support at 106, and then it's all the way down here. These guys aren't looking bullish whatsoever. So I still think equities are the main game in town because of the liquidity factor and a confidence factor as well. All right, let's take a quick peek here at some other stocks. Apple was in the news due to earnings. The company gapped down, tried to come back up, but remember I talked about this support level? And if I extend it over a little bit, there we go, and then I zoom in, we violated that. Then there were some lows here, last week, Monday, Tuesday. We got back up, and now we're back down. There's a little bit of ledge support here. That's where we're at now. The real target for Apple, and I would say the next downside technical target, it is the 200-day moving average. It is 190. It's $17 away. That's not the end of the world. Yeah, it's, just under 10% away, but that would be the target at this stage. Let's look at a few other big stocks. Google, we stayed above it. Look at the 50-day here, gang. 50-day SMA in orange. When we could stay above it, things were fine. We break it right here in September. We come back up and hit it. We roll over. We break the 200-day. Can't get above it. We come down. This thing isn't a downtrending channel. Doesn't mean it's going to zero by any stretch, but right now there is nothing bullish about what's going on with Google. And the Nasdaq's going to have trouble running if Google's not participating, and the same with Amazon. Once we, you can see in here the orange line again, 50-day simple moving average, the institutional moving average, the orange line. We get below it, and we get below the red line, which is your 20-day EMA. We can't get above anything. We fall down. We're trying to rally. Volume's peeling back here. Google is still bearish on the daily charts as well. The big stocks in the tech land just aren't coming along yet. Here is Netflix. We broke the 200-day last month. We're trying to rally. This thing is still bearish. It's above the 5-day, but it's also going down. Remember, Netflix is a stock from a seasonality perspective we're going to watch at the beginning of the year. And then I had a question on IBM and how to spot a potential turnaround. Number one, I would say this from experience as well. If there's a stock you really, really like and it's just going down a lot, there's always a reason. And I think you have to be careful not to get caught up in it and say, oh, it's down, 20, 30%, it's got to be a buy. I like to watch for some sort of turn, some sort of sign that a stock might be turning. And we do have big volume bars back on Wednesday and Thursday, but this thing cannot get out of its own way. It's below the 5-day EMA in blue. There's no sign of anything here. And in fact, this is still like a little bear flag or a big bear flag starting. Downside is the bears are completely control this stock. If I go back to a 5-year weekly, we cut through that August swing low from a year ago in 2017, like a hot knife through butter. It did tie in with a few lows in 2016, but the fact that we couldn't even stop to hang a little bit was a bad sign. Now they announced they're acquiring Red Hat. 110's the target. It's only $5 away, but if that falls, we're going to go back 10 years. Look at how significant this 110 area is now on a monthly basis for IBM. We had resistance in 2010. You have support beginning at the end of 2015, beginning 2016, and now you have the 200 period on the monthly coming in at 110. Big deal. If 110 falls, 100 just because it's the bottom of that little ledge, and then you start coming down here. Nothing says it's going to get there, but if I want to be bullish on IBM and I was looking for, well, where's a major turning point? It's back so long ago that these carry less and less weight. I mean, this thing is just butt ugly right now from a bullish perspective. So my answer is there's nothing bullish about this. This is flat out bearish. And one stock to keep an eye on here, I came across this one in my searching, is ESPR, Esperion. It had a big jump on Friday, but I like what it did from a technical perspective. Volume wasn't gigantic. We didn't have these towering bars, but it still did what it did on a down day. It cleared the 200-day SMA in purple, institutional moving average. It cleared these previous highs here and here. It closed near the highs of the day. And while we're not quite into the gap, we tested it. The upside target is 70. That's just under $15, just under 30% higher. That is a big potential move. Now, if I want to be bullish on ESPR with 70 as a target, what I would consider doing here is maybe using a 20-day EMA in red as a trailing stop. Or if I wanted a closer or tighter stop, maybe an 8-day EMA. Okay, so that's it, folks. I'm really curious about the elections. We'll have videos out this week. I'm going to keep an eye on it Tuesday. We'll probably see the markets moving, and we'll see if we're going to have that year-end holiday rally. So wish you guys all the very best. Take good care.